Okay, today is August 5th. This is the ES process map for Friday on a day where we expected price to go up. There was major news. I did not trade because I wanted to take the day off, but something I've got to keep in mind for the future is that when the market's going to move based on news, those can be the best days. So it would have been better off to have not traded yesterday and then traded today, but regardless. That's just the way that it is. So as you look at the 60-minute, first things first, you see that we have no untested fair value gaps below us until all the way down here. These are rebalanced fair value gaps, which could be support or resistance, but nothing. So, fall off, you'd expect to get to at least down here. So isn't it fascinating that the market repriced to the tick 4103 3/4, and it's the very bottom of this fair value gap? Isn't that just astonishing? No manipulation here. It's just support and resistance. Makes perfect sense, right? No. So as you go to the 15-minute, you can see the news, non-farm employment, unemployment, all those were high, and earnings. So three major announcements basically show that interest rates are going to go up, so the market goes down as a response. Huge flush down like this happened earlier in the week, or earlier in the month rather. And what it did when it did that is it just, it took 2 hours or whatever, however long it took, but it just rallied back 90% of the range and then sold off again, and then kind of went sideways, did the same thing. So what would we be looking for here in this situation is a long early if we can get a break in structure, or we're looking for the short if that happens first, and we're looking for the breaker here. So the breaker is the low pivot of the move that created the most recent high. That would be right here. So we expect it to come back to that, and that ends up being about 3 or 4 points of heat if you took it like right on that price. And again, it takes on the 15 minutes, 30, 60, and then 60 again. So 2 hours to get back to that price. So basically 10:30. On the 5 minute, you see that we don't get a break in structure here on the 5 minute. So if you were trying to get long off of this rebalance, you'd be taking a breakout essentially right here. But as you go down to the 1 minute, you can see there was a tiny break in structure. So this is a higher time frame pullback that you're looking for. And then so what that leaves us is what is going on when we get up to here. As you can see, none of these get retested. So there's really nothing to do until you get to here on the 5 minute. And then you see that it stops at the breaker. It returns and rips down, and you could say, well, it didn't break structure. Yes, right. I understand, but we don't need to wait for that because it's the first test back. And this is the large range. This is just high volatility, all it is. So we're basically looking for that to come back. This is the first test back. So we're going to want to short that into this level. We don't want to short it ahead of that. There's no reason to. Even if you don't get that, then you do get another attempt here, or continues down into this area, and then the process starts over again and comes back, makes a target right back here. So if you wanted to take this long from 16, your target would have been 38, roughly. And then probably that's the end for the day. On the 1 minute, now I'm making it clear that I didn't trade. I just want to point out that there is a microstructure break right here, which tests back into this fair value gap at this existing point. So with all this balance, we're expecting that to hold. Comes up, you get another test, you get a order block test, then you get a relative equal high test, then that's really it, end of the target. Then lower high, pull back after a break in the microstructure, fair value gap, continue lower, fair value gap, continue lower. Again, this would be a breaker right there. Look at that. Then pull back, another breaker right there. and then continue into this target right here. Then we're retesting this fair value gap. So what happens? Break in structure, second break in structure, which is what we're waiting for. Fair value gap in the 1 minute. We've got a fair value gap over here, so it's a nested fair value gap. Pull back, test, higher, relative equal high, order block, push higher, come back, test it again, and then rally into 38, and that's your target. So, as far as process goes, you've got at least 3 trades and 4 ways into one, 2 ways into another, 3 ways into another. So overall, very fascinating price delivery and good to remember for the future.